Hello, future millionaires, and welcome back. In today's video, I'm going to be going over the current geopolitical tensions caused by the Iran conflict, on top of also explaining the ramifications this is going to have onto the global economy, on top of financial markets. And look, before I get started, I want to quickly clarify that this is not financial advice, nor is it my political view, as my goal with this video is very simple. Provide you with the data in order for you to make the most informed decision regarding your current investments or whatever you want to know about. And I understand that right now being informed equals uncertainty. I know that with a simple tweet the market will shake up or down, but I still find it very crucial and very important to be informed with global news. And before I talk about the ramifications that this conflict is going to have in the global economy, I want to briefly give y'all a run through the history of what actually triggered this event. And as many of y'all know, this isn't something that started yesterday, but rather this has been building up from years of constant tensions, sanctions, and more. However, it mainly boils down to three main things, and the first one being Iran's nuclear programs. So imagine that Iran is trying to embark in nuclear programs, and they claim that this is to, I guess, diversify their energy sources into nuclear energy on top of other peaceful purposes. However, countries like the US and Israel are fearful that this could be used for military purposes. And this creates a major dilemma because, on one side, you have Iran claiming that it has a right to expand on its nuclear energy, while on the other side, you see how the same capabilities would basically give them the ability to create nuclear weapons. And contrary to what many people believe, under President Obama, there was a actual pre-existing deal named the JCPOA, and these basically limited Iran's nuclear capabilities in exchange for, I guess, lifting some sanctions. However, when President Trump got into office in 2018, he basically claimed that this wasn't strong enough and withdrew the US from this program. And the second reason is regional influence. Imagine that, the US and Iran are in a constant tug of war, as Iran sees the US as a threat to their sovereignty. And of course, there's a lot of US allies in the Middle East, such as Israel, Saudi Arabia, Qatar, and more. And of course, Iran also has, allies such as Lebanon and other countries. So of course, this creates a constant tension between, the two countries, I guess. And again, it's something similar, I guess you could say, to a tug of war. Last but not least, the most obvious is oil. And just think about it. In the Middle East, there's a lot of OPEC countries, and OPEC countries are basically the major countries that produce oil. So yeah, I mean, there's a lot of influence there. And just think about it. It's things like the Strait of Hormuz, a small checkpoint, 20% of oil basically goes through here. And of course, whoever has control over this has a great influence in financial markets and a lot of influence in the global economy. All right, so now we have arrived at the fun part, the global economy and financial markets and what to look out for. So I want to start off by looking at the bond market. And as you know, the US is currently sitting at a 39 trillion dollar, national debt. And this is going to get very dangerous if, the war keeps going, because as the war keeps going and there's more uncertainty, investors are demanding higher interest rates, which basically means that the government has to, pay more in interest payments. And just a simple 0.10% increase would increase interest payments by $35 billion. That is literally the NASA annual budget. Meaning you're literally spending the NASA annual budget in just interest payments because of a war. And this obviously raises concerns as to the sustainability of this war in the long term, because of course, as uncertainty rises, this is also going to rise. Now look, if we open TradingView and we enter petroleum. Now look, if we look at gas, we can see how it was in a downward trend with, lower lows, lower highs, lower lows, lower highs. However, up to this point, oil prices have gone up to, $100 a barrel. And the issue is if, they stay at this for a long time. We could say that it would have just happened for 3 days. Well, sure, there was a quick uncertainty. But if this keeps staying up like this, inflation is going to go up, and gas prices are definitely going to go up alongside inflation for other products, as shipping costs, etc. Right? There's a lot of unintended consequences that will come from this. So as for the sustainability of this, it's going to be very, very bad. Inflation is going to go up, and of course, from a federal, the Federal Reserve is obviously going to have to reconsider monetary policies like lowering interest rates, as that's what they were trying to do in 2026 in order to promote economic growth. However, of course, with this inflation, they can't do that because it would cause more inflation. So we're seeing a pretty ugly situation that's painting right now. As for stocks, we can see how tech stocks have been suffering a lot. Meta has been falling for other reasons besides this conflict. However, this conflict has also contributed a lot to it. It's fallen a total of 33% from all-time highs. Meta has fallen a total of 35% from all-time highs. And if we go into the S&P 500, we can see how it's been holding up a little bit more. However, it's still falling 9% from all-time highs, and it's still pretty dangerous because if this doesn't stop soon, it's going to keep falling a lot. As for tech stocks, we have also seen how it's fallen more than NASDAQ because tech stocks are more like growth stocks. So investors like to look more in the future, and this can only be accomplished with lower interest rates. Which is why actually investors are looking more into companies with strong cash flows like Coca-Cola, Pepsi, etc. So my personal take, or at least what I'm going to try and do, is keep investing in this moment of uncertainty because I believe that we as young people, as I previously mentioned, it's our biggest asset. And for example, say that the stock market keeps going down, well, at least I know that I have time and that I can wait it out. Regardless, I do see that Trump obviously wants to win midterms, and he isn't going to do this with oil prices that are skyrocketing at all-time highs. Um, Nor is he going to do this with inflation. However, I do see a bigger problem, and that's that stuff is going to fall out of Trump's hands. It's unlike the tariff situation where I don't know if y'all remember, but he was turning on tariffs, he was turning them back off, and he was just doing this repetitive cycle. However, I think it might get to the point where it's going to not be in Trump's hand, especially because he already ignited a fire and he basically already started tensions, and there's already been a lot of damage in the Middle East. Been a lot of disruptions, and I feel like it's not going to be as easy to back off out of this. So it's going to be very interesting to see what happens. But then again, we are in a moment of uncertainty. So again, guys, remember, timing the market beats timing the market, and I think right now is the time that we need to stay, calm and need to keep our investment strategy. Of course, it all depends on your specific needs. If, for example, say that you're an older investor and you don't like these moments of uncertainty, maybe you should back off. But for those that are willing to take a little bit more risk and see more potential profits, of course, me personally, this is what I'm going to be doing and keep investing. So yes, I hope you enjoyed today's video. And if you have any questions, please make sure to comment them down below. Please make sure to like and subscribe if you enjoyed today's video, and have a wonderful day.